What is going on, everybody? It's your boy, Mr. Banks, coming at you live. And you already know we caught the drop today on SPY for over 100% banger. And I make these videos so that you can learn to catch these trades like I do, take 11 years of experience, put it all down. So hopefully you can master this within 1, 2, 3 years. So thank you guys for tuning in. Hit that retweet and likes button so you don't miss any of this educational content I try to put out on a daily basis to make you a profitable trader. Now, as you guys know, there is no hindsight trades on this. These are live trades that are taken every single day. Every single video is a live trade that is taken. And here you guys go. We called the 570 puts at open. Just want to go over how did I find this. I even called puts to take at close yesterday. Was going to swing them today, but since we grabbed 40% at the end of the day there, no reason to swing. It's all right because we grabbed these puts today, ending up going over 200% at the very, very end. Shout out to the team for dominating today. If you guys came here for the trade recap. So as you guys know, I like to go out to the higher time frames. So let's always look on the higher time frames. What's going on in the daily time frame? So let's take a look here. I'll get to the EMAs in a second that are going to help you guys. And hopefully this video does a lot for you and makes it more simple and simplified so you can catch some trends. What did we do last week, right? We broke out into new all-time highs. We had this double top around 565 on SPY. We broke higher, but then we just kind of consolidated, right? A little consolidation, nothing too crazy. We have yet to break out again. Now, since we had that pullback, we had a nice trend up, but now we're consolidating again. As you guys know, what happens? We trend, we consolidate, we trend, we consolidate. Now we can either break out to the upside here, or we can break out to the downside. Either way, I will be looking for that final breakout out of this base, right? It's a base, it's a consolidation, it's a range. So pro tip, when we're in a range or consolidation, just do less until we start trending, right? When we are consolidating like we are here, right? We're just stuck in a tight range. So what we really like to trade is when the market starts to trend, right? Because when it starts to trend, we can catch that trend. It's a much easier time to trade. If we're trending higher, we're in a bullish trend, great. It's always buy the dip. We can buy breakouts. If we're trending down, we can buy the breakouts to the downside. We could sell the rips, right? Because we are in a bearish trend, right? So we're consolidating. Just take it one trade at a time. But the biggest thing I was seeing here, especially with yesterday's close and why I was very bearish on it, was let's take a look at what happened. Sorry. Let's take a look at what happened. Right? Nice volume. What happened? We broke out. We had some decreasing volume, and then we had some decent volume come in yesterday. But what did we fail to do? We failed to make a new high. We failed to break out. So with the strength of yesterday, right? Sitting at the top of this range, we failed to break out into new highs. Now, it was in the month rebalancing, all that good stuff. But what I really wanted to see to be bullish on today was we really needed to break over those all-time highs. We had the volume to do it. You can see here on the 1 hour, you can see here on the daily. We had the volume to do it, yet we failed. So what is that telling me? Sellers are still very much in control for now, right? Sellers are in control. We had the volume, we had the push, we were right there. We couldn't do it. We couldn't make it happen, right? The buyers could not make it happen. That was the first thing for me to lean bearish. The second thing for me today, leaning a little bit bearish, is something that not a lot of people catch. And that's going to be called bearish divergence, right? Bearish divergence. So we're seeing here on the MACD, right? We have some bearish divergence. Now, sometimes it takes months, sometimes it takes weeks, but overall, what we are seeing is we are in a nice bearish divergence. What does that mean? We created new highs, right? We're creating new highs, yet we're not creating new highs here, right? So there's a divergence there. If we were to create a new high like we did, breaking over the all-time highs here, this should now be higher than this all-time high, right? Therefore, it's actually acting as it should, but this is now showing a divergence. Again, this can take months to fully play out. It could take weeks. It could start to play out right now. But it was something coming into this week that I was already keeping my eye on, was that there was a major bearish divergence going on here in the market. Great. So two things now that we're coming into today, and I'll get into the EMAs because this is what's going to help you the most. When we see trends and understanding, playing the full trend out today, is we had a nice big trend to the downside at open. So I'll show you exactly how we caught that. But I just wanted to show you the overall picture first, right? And this is something I think everyone should start doing, is looking at the overall picture. What is going on overall? Great. We're coming into the week with major bearish divergence. Yesterday, what happened? We had the volume, right? We had the volume, we had the push, we were right there. We couldn't break into new highs. What is that telling me? Bulls do not have the power to push us yet, right? Bulls do not have the power to push us out. Otherwise, with that volume, with that push yesterday, we should have easily broken into all-time highs. We couldn't do it. You couldn't do it. Sellers are still very much in control. Great. So now we're looking at the overall picture of what is going on, overall picture of what is happening. Now let's get into the nitty-gritty of some EMA work that I think will help you guys in the long run catch these trades as well. So when we're using EMAs, the one important thing to know about EMAs is that they don't work when we're not trending. They do work when we're trending. And you should say, okay, why is that important? Well, that's important because technically, if we're not trading, we're moving sideways. They're all just mashed together. There's no trend, therefore you should not be trading. Now, can you scalp? Are there moves that you can take? Absolutely. But in my opinion, those are for more experienced traders. As a new trader, it is all about doing less in the market, doing less, doing less, doing less. Now, when we start to trend, like we had a beautiful trend today, then you can take a trade. But beyond that, the EMAs are great for a newer trader or an experienced trader because, one, shows you some good entries, shows you some good exits, as well as showing you if it is trending or not. And understanding when something is trending is definitely confusing as a newer trader. It's something that you can miss or overcalculate, right? Because yeah, it's like we're kind of trending here up, but we're not really in a full trend, right? There's no divergence between the EMAs, right? They're not spreading apart. We're kind of just flat. They're all jumbled together. Is this technically a trend? Yes, it's a dollar trend. Great. But it's not a beautiful trend like you want to be trading like we did today. So one thing to note when you're trading the EMAs, and I'll show you exactly which ones I use, is we want to see that divergence, right? And what I mean by that is we want to see them start spreading apart. When they start spreading apart, it's going to show you that a beautiful trend is starting to form. When they're, kind of just jumbled together, there's no real nice big trend happening. Just like here, um, on a day like this, right, we had them divergence, right? The divergence was pretty nice. They were spreading apart. Unlike a day like today, right? They're all jumbled together, very jumbled together. So we can see here, we want to see them start to spread apart. This one was a decent one as well. But when we start to see these the divergence really starting to come out, like we saw on this day, this was a beautiful day. Now, this was, I believe, last week. We took the puts here and absolutely smashed on it. And you could see that divergence. They're pulling apart, showing a nice, beautiful trend forming and happening. This was a little bit of trend, but they're not fully divergence. Obviously, these are all jumbled together. Nothing really great yesterday. And then today, absolutely beautiful. So understanding when using the EMAs and understanding the trend, this is important. Looking for that divergence, looking for them to spread apart, wide, moving, right? If they're not, it's not trending. It's not something you should be in. Great. Now, what EMAs do I use? Well, the EMAs I like to use are going to be the 200. Let's put it 200. Actually, let's go from smallest to biggest. The 8 or 9 Now you guys can use either one. If you like the number 8, use the number 8. If you like the number 9, use the number 9. They're the same line, no difference. Next on our list is going to be 13, 48, and 200. 13, 48, 200. These are EMAs. Now, I always get the question, why EMA over SMA? EMA is more heavily calculated on the most recent price action. So if we're going to be using moving averages within our strategy, don't we want some that are more heavily weighted on the most recent price action if we are day trading? Makes sense, right? Great. So again, 8, 9, choose one. You can have both, but as you guys can see, there are literally these two blue lines here. It's the same one. Just choose whichever number you like more. I like to use 8. 13, 48, and 200. Now, the 200 EMA is going to act how it does when you first start learning trading. Below is bearish, above is bullish, right? Now, it doesn't have to exactly work like this, but this is typically how you want to use it. If we are trending below the 200, then that is technically bearish territory. If we're above the 200, it's technically bullish territory. Now, how do I use the 13 and the 48? So the 13 and the 48 is what I use for the actual cross. Now, if we take a look here, the 13 crosses the 48. Great, we are crossing down. So the 13, this orange, is crossing below the 48. Bearish trend, right? That's going to be showing that that bearish trend is starting to form. If we cross the 1348 up, obviously bullish is going to be the opposite. But since we took puts today, showing you the downside. 1348 cross. We're below the 200. We failed the multiple top here, and we failed right into the supply yesterday, creating a lower high from the top of this trend. So technically, right, we have the high, lower high here. We kind of based just a little bit above this, but didn't break out all-time highs. And then we failed below yesterday's high, below Friday's high, and below Thursday's high, right? So sellers are in control. So just the price action itself is showing us sellers are in control. From there, 13 crossed the 48 down, right? Bearish. We're below the 200. Bearish. Now, how do you use the 8-9 EMA? Well, that's going to be our trend indicators, right? Trend indicators. 5-minute, 10-minute, you can use both. But typically, I like to just go between both of them. In this instance, the 5-minute works just fine, right? We took the entry and we're looking for the downside. So how do I stay in the trend, or how do I stay in this trade as long as possible? Now, to do this is where you start to use the 8 or the 9 EMA, your preference. When we get a full break and hold above that, you can now fully exit. Definitely be selling runners along the way at your levels. But once you break and hold above, and what I mean by that is a candle that opens and closes above that 8-9, you can now sell fully out, right? Very, very simple. We hold a trend as long as we're below, and we break above it with a full body candle, not the wicks, just the body that opens and closes above it can show you the exit. Now, this was pretty popular here, right? Trending down, bear flag, essentially another bear flag, trending down, right? There's nothing here that is showing me reversal. Did we kind of bounce here? Yeah, but what do? We just bear flagged out, right? Very bearish structure. Beyond that, using the EMAs, this BBR strategy, right, showing us we are bearish. And I went from a top-down approach. So you guys see how I went from the daily time frame, the higher time frames, looked at the overall picture, saw what was going on. From there, breaking it down into the smaller time frames. And then I added on top of this an EMA strategy called the BBR strategy that I have coined and made to help you stay in trends longer, see the trend, understand the action that is taking place. So now you can take trades based on this, right? Again, if you guys have any questions, feel free to let me know. Drop them in the comment section. We'll be dropping more videos on this. Maybe I'll take this example and make a document with it so that we have just a full new explanation. I have all the old videos you could check on the YouTube. But I'll give, maybe this is a good explanation of, what went on today. And again, this isn't blind. You can see here that I'm even giving 568, 565. I'm even giving you, still holding some for that 566, 565 level, right? I even gave the team the level. Where do we hit? 566, right? Not rocket science, right? It's not something I'm just making up. This really works. So guys, if you have any questions, just please let me know so that I can help make you a better trader, because that's why I do it. If you want to join the team, I would love to see you in there. Again, my name is Mr. Banks. Thank you guys for tuning in. Believe in yourself, because you guys can do this. I was able to do it. You're going to be able to do it. Keep putting in the time, keep putting in the effort. Thank you guys for tuning in. I'll see you next time. Later.